This chart shows the ideal buy point according to stage analysis. And that is this point here, A, which is the break above the 30-week moving average on a massive increase in volume. The second best time to buy is point B here when a market retests the 30-week moving average before moving again higher. The point B doesn't always happen. Sometimes when markets break out into a new stage to advance, they just keep surging higher. But if you get lucky enough to get a retest point B, that's the second best point to buy in a new bull market. And the point of identifying the ideal buy point is to avoid getting trapped into buying into a declining market, which would be a stage 4 back here when sellers have control, or a stage 1 basing market where buying and selling is in equilibrium but no new trend higher is established. So the point of stage analysis is to not get exposure to a declining market or a basing market, but to wait for the stage 4 to complete and the stage 1 to complete and line yourself up to buy into a new bull market at the right time to reap the rewards of the new bull market as it progresses higher. And another thing to note is that the media typically gets excited about a market when it's way up here after it's been advancing for a long time. But what's cool about stage analysis is you can get excited about a market very early on in a potential new bull market when nobody else is paying attention. So in reality, you're typically getting more excited when nobody else really even knows what's going on, which is kind of a cool thing to think about. And what I want to move into is what's going on currently in the gold market. If you look at gold compared to foreign currencies, we can see that gold was in a stage 4 decline and then a stage 1 base, and then now we're getting like this key retest of the 30-week moving average after gold in foreign currencies broke out in late 2014 and early 2015. So we're at a very key recognition point for gold and whether it's going to continue in a bull market or it could conceivably break back down and continue into a basing phase for a long time. So we want to see what happens here to confirm that gold is still within a new bull market. If you look at one of the leading gold stocks, Franco Nevada, Franco bottomed. I've talked about in previous videos. It bottomed way back in mid 2013 when essentially the stage 4 decline in gold was done. And Franco's almost doubled actually since then. But what's interesting here is that, ever since the US dollar went parabolic, Franco has consolidated into a nice base again. And we're starting to see Franco actually potentially break back into a new advance and a potential new stage 2 bull market here. We're starting to see a slight increase in volume, but I'd like to see more volume come into Franco Nevada as it moves up to this resistance point and potentially breaks out into another advancing phase. And what we want to see with these gold stocks is kind of a weight of the evidence thing. We're starting to see more and more gold stocks behave bullishly, which contributes to the case that the gold sector is breaking out into a new bull market. If you look at Lakeshore Gold, Lakeshore Gold actually bottomed back in mid 2013 when gold bottomed as well, and actually went up over 100% in the mid 2014. But as I mentioned, the dollar kind of put the hamper on gold for the last 6 to 8 months, but Lakeshore Gold actually has been taking some volume again recently, and could be starting its own stage 2 advance here. So this is another key gold stock to watch, and if we start to continue to see more volume come in, it increases the odds that this is going into a new advance as well. Finally, one of the key stocks to the gold market is Newmont Mining. Newmont, broke out into above the 30-week moving average back in early of this year, and then has been consolidating since then. So the second ideal buy point would have been just recently when Newmont retested the 30-week moving average. And what we want to see is, again, volume continue to come into Newmont. And if Newmont can break above the level it's at just about now, right around 26, 27, it's really going to lend the case for the gold stocks to be back into a new bull market. If you look at the GDX ETF, it's not as strong as some individual gold stocks because it's being weighed down by the weaker gold stocks. But um, we're seeing GDX retest the 30-week moving average once again, and volume last week in GDX was above average. So we're starting to see GDX. This is the fourth time in the last year and a half that GDX has retested the 30-week moving average, and it's only a matter of time before one of these tests finally breaks and we get a new bull market in all gold stocks. So this is another thing to keep an eye on, is whether GDX can get back above this current level. So really, to conclude, we're at a key recognition point for the gold stocks here, and we have to wait and pay attention to what's going on. If we continue to see volume come into these stocks and we see more and more of them acting bullishly and breaking out, we can be more certain that gold is in a new bull market, and there's going to be some exciting gains to be won as more and more money gets committed to the sector.